If the dollar weakens, your savings buy less, your groceries cost more, your retirement moves further away. And here's the most dangerous part. This won't feel like a crisis until it's too late. China understands this. That's why they don't need to defeat America. They just need the dollar to slowly lose trust. And they've been planning this for decades. Most Americans think the dollar's too big to fail. It's the world's reserve currency. It backs global trade. It funds our lifestyle. We've been told since childhood that the dollar's invincible. But here's what they're missing. Currencies don't survive on power. They survive on belief. The moment trust weakens, strength doesn't matter anymore. And China figured this out years ago. They're not trying to destroy the dollar. They're making the world need it less. There's a massive difference. One's an attack. The other's erosion. And erosion stays silent until the ground gives way beneath you. You don't see it coming. You just wake up one day and realize the foundation's gone. So how did we even get here? How did the dollar become so dominant that we can't imagine a world without it? After World War II, America rebuilt the global financial system around one simple rule. If you want to trade, you use dollars. Want to buy oil from the Middle East? You need dollars. Want to purchase machinery from Europe? Dollars. Want reserves that won't collapse overnight? Hold dollars. This wasn't just smart economic strategy. It was structural power. Countries literally had to earn dollars just to survive in the global economy. They had to export to America or find other ways to accumulate dollar reserves. That constant demand kept the dollar strong. It kept American borrowing dirt cheap. It allowed us to print trillions without immediate consequences because the entire world absorbed it. Every country needed a dollar cushion. Every central bank held dollar reserves. Every major transaction cleared through dollar systems. But here's what most people don't realize. Demand isn't permanent. It's conditional. It depends on the dollar being the most convenient, most trusted, most accessible option. And China studied exactly where those conditions bend. They didn't just look at American strength. They looked at the cracks, the dependencies, the pain points. They asked themselves, where does the system frustrate people? Where does it create bottlenecks? Where does it impose costs that countries would love to avoid? They realized something most economists completely overlook. You don't need to beat the system. You just need to build an alternative that's more convenient. Think about it. Netflix didn't destroy Blockbuster by attacking them. They just made renting movies easier. Uber didn't destroy taxis through confrontation. They made getting a ride more convenient. China's doing the same thing with global finance. They didn't challenge dollar dominance head-on. They studied the pressure points. They asked one brilliant question. What if countries could trade, borrow, and build without ever touching dollars? What if there was a parallel system that didn't reject the dollar but simply made it optional? Not confrontational, not revolutionary, just optional. That's not a declaration of war. That's a business model. And it's already working in dozens of countries right now, quietly reshaping how international commerce flows. Here's the part that should genuinely worry you. When global demand for dollars drops, even slightly, America doesn't just lose influence abroad. We lose our cheapest advantage at home, the ability to borrow at almost no cost. Right now, the US government can borrow trillions because the world needs dollars to function. They have to hold them. They have to use them. Foreign governments buy our treasury bonds not because they love us, but because they need dollar reserves to trade. But what happens when that need fades? When countries can trade in yuan or settle in digital currencies or barter directly through Chinese infrastructure projects? Lenders start demanding higher returns to compensate for lower demand. That means higher interest rates across the board, higher mortgage rates for American families, higher car loan rates, higher credit card rates, higher small business loan rates. It also means the government has to spend tens of billions more just servicing existing debt. We're talking about a debt load that's already over $30 trillion. Every percentage point increase in interest rates costs hundreds of billions annually. And when that happens, there are only two choices politically. Cut spending dramatically, which means cutting Social Security, Medicare, defense, everything people depend on. Or print more money to cover the gap. Guess which one's politically easier? Guess which one lets politicians avoid the hard choices? Printing more money feels painless at first. There's no immediate shock, no visible crisis. No panic in the streets, but it shows up later as inflation creeping into every corner of your life. Your paycheck stays the same, but rent climbs 10%, then 15%, then 20%. Eggs that cost $3 now cost $5. Gas that was $3.50 is now $5.20. Insurance premiums double. Childcare costs spiral. College tuition becomes even more absurd. And here's the absolute kicker. The dollar won't collapse overnight in some dramatic crash. It'll quietly cost you more every single year. Death by 1,000 cuts. And by the time most people notice the pattern, by the time they realize this isn't just bad luck or corporate greed, but a systemic shift, the damage is already baked into the system. It's too late to reverse. Now stay with me because this is where it gets really interesting. You know Jeff Bezos? He didn't build Amazon by chasing quarterly profits or pleasing shareholders every 90 days. He built it by sacrificing short-term comfort for long-term control. He lost money for years. Investors doubted him. Wall Street analysts called him crazy. His stock got hammered. But he wasn't playing their game. He wasn't trying to win the quarter. He was building infrastructure, warehouses, logistics networks, cloud computing systems. That would make him absolutely irreplaceable. By the time competitors realized what he'd built, it was too late. He owned the infrastructure. He controlled the flow. He set the terms. China's doing the exact same thing on a global scale. While America optimizes for the next election cycle, China plans in decades. While we focus on consumption, cheap debt, and keeping voters happy today, they focus on supply chains, resource control, infrastructure projects that'll pay off in 20 years. While we react to crises as they appear on CNN, they create the conditions that define which crises even matter. When one side plans in 4-year election cycles and the other plans in generations, the outcome's already written. It's not about who's stronger today. It's about who's building the system that decides what strength even means tomorrow. It's about who controls the roads, the ports, the energy flows, the trade routes, the digital infrastructure that money moves through. Let me show you exactly how this plays out in the real world with real countries making real decisions. Imagine you're running a developing country. Could be in Africa, Southeast Asia, Latin America. Doesn't matter where. You desperately need infrastructure. Your roads are crumbling. Your ports can't handle modern shipping. Your power grid fails constantly. You need energy. You need capital to grow your economy and provide basic services for your people. Your population's young and growing and they want jobs, education, opportunities. So you need to build. Fast. Traditionally, you'd go to Western institutions, the International Monetary Fund, the World Bank, the US Agency for International Development. They'd offer loans, sure, but with conditions attached. Lots of conditions. Restructure your entire economy along free market lines. Open your markets to foreign competition. Accept international oversight of your spending. Change your labor laws. Privatize state-owned companies. Cut subsidies. Raise taxes. The whole process takes years of negotiations. Multiple review periods. Conditional disbursements. The terms are rigid. The requirements are invasive. Foreign consultants arrive to tell you how to run your country. And everything, every single transaction, every loan disbursement, every payment runs through dollars. You need massive dollar reserves. You need dollar liquidity. You're constantly exposed to dollar fluctuations triggered by American monetary policy that has absolutely nothing to do with your economy. The Federal Reserve raises rates to fight inflation in Ohio, and suddenly your debt service costs explode. Now imagine a completely different option appears. China shows up with a simple proposal. We'll build your roads. We'll build your ports. We'll build your power grid, your hospitals, your rail network. We'll bring the engineers, the equipment, the expertise. We'll start next month. They don't lecture you about governance. They don't demand you restructure your society. They don't send consultants to redesign your economy. They don't require you to hold massive dollar reserves or maintain dollar liquidity. They offer financing in yuan or even through barter arrangements, your copper, your lithium, your agricultural products for their construction services. The project starts in months, not years. The terms are flexible. You negotiate directly without layers of bureaucracy. And you never have to worry about dollar shortages or currency crises triggered by decisions made in Washington that have nothing to do with you. So you make a choice, not because you hate America, not because you love China's political system, not because you're picking sides in some new Cold War, but because it's easier, faster, less invasive, and less risky for your people. It's practical, it's convenient, it solves your immediate problem without the drama. They didn't reject the dollar, they simply stopped needing it for that transaction. One transaction, then another, then 50 more. And that's how systems actually change in the real world. Not with dramatic announcements at the United Nations, not with breaking news alerts, not with declarations of economic war, just with 1,000 small decisions made by dozens of countries, all independently concluding the same thing. There's an easier way now. And those decisions, repeated across continents, quietly point in the same direction, building momentum that becomes irreversible. And here's where the story takes a turn that changes everything. China doesn't want the dollar to crash. I need you to really hear this. They don't want a collapse. They want it to bleed. Slowly, predictably, quietly. Why? Think about it. A sudden crash would destroy their own dollar reserves, which are still massive. It'd destabilize global markets they depend on for exports. It'd hurt their economic growth. It'd create chaos that could backfire. That's not a victory. That's mutual destruction. Nobody wins. But a slow, managed decline. That's the perfect scenario for them. Because when something crashes, people panic, governments mobilize, emergency alliances form overnight, the Federal Reserve intervenes with massive programs, Congress passes emergency legislation, international cooperation kicks in, the G7 coordinates responses, crisis mode activates the system's immune response, all the defenses activate. But when something bleeds slowly, people adjust, they adapt, they rationalize, they normalize the new reality one small change at a time. A collapsing empire panics and fights back with everything it has. A bleeding empire keeps paying, it keeps trading, it keeps borrowing, just at slightly worse terms. It keeps losing ground without fully realizing how much is actually gone. And by the time the total damage becomes obvious, by the time someone adds it all up and says, wait, we've lost 30% of our purchasing power, the alternative system's already in place, already normalized, already accepted as just how things work now, that's not a conspiracy theory. That's the actual playbook being executed right now. So let's bring this back to what it actually means for your life. The dollar isn't going to disappear tomorrow morning. Your bank account won't suddenly be worthless. This isn't about doomsday prepping or buying gold bars and hiding in a bunker, but the cost of living will keep rising faster than wages. Borrowing will get more expensive year after year. Your savings will lose purchasing power gradually but relentlessly. And every single time you hear about inflation or rising interest rates or government spending debates, you'll be watching the same slow process play out. The dollar's losing its role as the automatic default choice for global transactions. And every time that happens, it becomes incrementally more expensive to be American. Not in a way that makes primetime news, in a way that shows up in your grocery bill, your rent statement, your retirement account projections, your kids' college fund. Think about what that actually feels like over 10 years. You're working the same job, maybe even getting modest raises. 2% here, 3% there. You feel like you're doing okay. But somehow groceries that used to cost $150 now cost $240. Rent that was $1,400 is now $2,400. Your car insurance doubled. Your health insurance premium tripled. Your property taxes went up 40%. You're making more money on paper, but you're falling behind in reality. That's not bad luck. That's not just corporate greed. That's what happens when the currency you earn slowly loses its purchasing power, because global demand for it is quietly declining. Other countries don't need to hold as many dollars, so there's less demand, so the value drifts down, so your dollar buys less. And the cruelest part? Most people will blame themselves. They'll think they're not working hard enough, not budgeting well enough, not making smart enough choices. They won't see the systemic shift happening underneath everything. Empires don't fall when their currency collapses in a single catastrophic event. They fall when ordinary people stop believing it'll protect them. When workers realize their paycheck doesn't stretch like it used to, and there's no clear explanation why. When savers realize their nest egg's shrinking in real terms, even though the number in the account stays the same. When parents realize the future they're building for their kids costs twice as much as they planned, and their wages haven't kept pace. That's when belief breaks, not with a bang, with a slow, grinding realization that the rules changed and nobody told them until it was too late to adjust their plans. So here's the real question you should be asking. If the world slowly stops needing the dollar, who actually pays the price first? Not the government. They'll keep printing and borrowing. Not the corporations with offshore accounts, currency hedging strategies, and international revenue streams. Not the wealthy with diversified portfolios, real estate holdings, and assets in multiple currencies. You pay. The worker, the saver, the middle-class family trying to build something stable, the young person trying to save for a first home, the retiree on a fixed income watching their purchasing power evaporate. Because when the system shifts, the people who depend on it most, who have all their eggs in one basket, are always the last to see it coming and the first to feel the cost in their daily lives. On this channel, we don't chase headlines. We break down the systems behind them before they break you. If you want to understand how money, power, and global strategy really work, not after the damage shows up in your bank account, but before, when you can still prepare and adapt, this is where those conversations happen. We dig into the mechanisms most financial channels won't touch because they're too complex, too uncomfortable, or too far removed from the daily news cycle. We connect the dots between central bank policy, geopolitical strategy, and your actual cost of living, because understanding the system is the only real protection you have when the system starts changing the rules, because China's next move isn't about currencies anymore.